Okay, let's just dive right into this. Welcome to our latest explainer, where we are going to tackle a massive, honestly kind of uncomfortable reality in the financial markets. We're talking about why an astonishing 95% of traders end up completely blowing their accounts and walking away with absolutely nothing. Today, we're tapping into the legendary trading psychology secrets of Mark Douglas. Specifically, we're going to break down the 15 rules that separate the permanent losers from the consistently profitable pros. So if you've been sitting there struggling with your charts, getting frustrated, well, this is exactly the mindset reset you've been looking for.
Right off the bat, let's address the elephant in the room. Why do 95% of traders fail? The industry really wants you to believe that you're just one perfect strategy, or maybe one secret custom indicator or some hidden chart pattern away from becoming a millionaire. But honestly, that is a complete myth. As we'll uncover throughout this explainer, the real battle isn't actually against the market. It's a battle against your own nervous system.
Consider rule number 9 from Mark Douglas's core teachings. There is this stark, literally night and day difference between amateurs and professionals. Amateur traders desperately want validation. They want their analysis to be right, they want to prove the market wrong, and let's be real, they want their egos stroked. But professional traders, they literally do not care about being right. They just want profitability. It's this massive psychological shift from seeking a pat on the back to just flawlessly executing an edge.
So here is our roadmap for today. We're going to cover the 95% trap, accepting market uncertainty, adopting the casino mindset, cutting your losses, mastering your psychology, and then we'll wrap the whole thing up with 5 actionable lessons for beginners. Let's jump into part 1. Section 1. The 95% trap, focusing on strategy versus discipline.
So Rule 8 tells us that consistency comes strictly from discipline, not strategy. You could have an absolutely incredible system with an 80% win rate, but if you lack emotional control, you will somehow still find a way to lose money. It's crazy, but it's true. Then there's Rule 12, which tackles overtrading. Whether it's the fear of missing out, revenge trading after a really frustrating loss, or just clicking buttons out of sheer boredom, overtrading is 100% emotional trading. And true confidence? Well, Rule 13 tells us it isn't built by watching flashy motivational videos. It comes from repetition, from journaling, and from disciplined execution. Jumping constantly from strategy to strategy is just a clever little distraction your brain uses to avoid doing the real, boring work of self-discipline.
Moving right along to Section 2. Accept market uncertainty. Spoiler alert, you don't need to predict the future.
Rule 1 states a really hard truth. Anything can happen. No setup is 100% guaranteed. None. Zero. And then Rule 2. This is incredibly liberating once you truly absorb it. You do not need to know what happens next to make money. Actually, really let that sink in. You just need an edge that plays out over a series of trades. Rule 3 reminds us that every single trade is a completely unique event. Even if a chart pattern looks identical to a winning trade you took yesterday, the underlying buyers and sellers operating right now are entirely different today. Professionals accept this complete uncertainty. Amateurs, they absolutely exhaust themselves trying to fight it.
All right, Section 3, think like a casino. This is all about the incredible power of probabilities.
So, what exactly is the casino mindset? Basically, it's operating with small risk, relying on a consistent mathematical edge, and focusing entirely on long-term execution. Think about it for a second. A casino doesn't panic and change the rules of blackjack just because some tourist hits a lucky streak, right? They don't sweat a single lost hand because they know the math is completely tilted in their favor over thousands of hands. If you want to survive the markets, you have to stop acting like the emotional gambler, desperately pulling the slot machine lever, and start acting like the cold, calculating casino owner.
This mindset really requires 3 core rules. Rule 4 is thinking in probabilities, accepting that out of 20 trades you might lose 8, but you'll win 12. Then, Rule 5 drops a harsh truth. The market owes you absolutely nothing. It doesn't care about your rent, your car payment, or how badly you need a win today. You must detach emotionally, period. And Rule 6 is your ultimate safety net. Accept the exact risk before you ever click buy or sell. Listen, if losing the money on your current trade makes your heart race and your palms sweat, your position size is mathematically way too big for your psychology. Drop it down. Which brings us to Section 4, detach and cut losses. We need to view these as business expenses, not ego hits.
Rule 7 points out that fear and greed actually stem from our own expectations.
When you expect the market to do exactly what you perfectly drew on your chart and it doesn't, you panic. The fix here is to trade what you actually see unfolding in front of you, not what you secretly hope will happen. And Rule 10 is completely non-negotiable, guys. Cut losses without hesitation. Think of small losses as the basic overhead costs of running your trading business. It's exactly like a restaurant buying ingredients. Actually, scratch that. It's more like replacing broken plates. Holding onto a losing trade out of stubborn ego is like gripping a hot stove and just hoping it cools down. It is exactly how 95% of accounts get completely wiped out.
Okay, Section 5, Master Your Psychology. This right here is your ultimate edge.
Rule 11 makes it incredibly clear. Your mindset literally dictates your results. You can give two traders the exact same strategy with the exact same entry criteria, and they will get totally different results. Why? Because the one who constantly doubts their plan is going to exit early, they'll hesitate, or they'll mess with their stop loss. Rule 14 highlights emotional neutrality, which is the absolute cornerstone of execution. And Rule 15 is paramount. You must trust yourself in your rules way more than the chaotic noise of the market. And trust is built by showing up and following your plan, day after boring day.
So, what is emotional neutrality? It's the professional practice of avoiding both massive euphoria after a win and deep depression after a loss. Why is this absolutely crucial? Because getting too excited after a big win floods your brain with dopamine. It leads to supreme overconfidence, causing you to recklessly double your risk on the very next trade. And on the flip side, getting depressed after a loss leads straight into revenge trading to try and win it back. Maintaining a dead calm, boringly neutral baseline, that is the absolute secret sauce of the top 5%.
I want you to really listen to this core philosophy from Mark Douglas. The market is uncertain. Your job is not to predict. Your job is to execute your edge flawlessly. Let that really sink in for a second. Your job description as a trader is not to be some mystical fortune teller. It is simply to recognize your setup, manage your risk, and execute your system without a moment of hesitation. This single mindset shift is what permanently separates the desperate gamblers from the ice-cold professionals.
Finally, Section 6, 5 Lessons for Beginners. Let's get you on your path to consistency. If you walk away with absolutely anything from this explainer today, make it these 5 steps. Number 1, protect your capital above all else. It's your inventory to do business. Number 2, focus purely on the process of flawless execution and stop staring at your fluctuating profit and loss screen. Number 3, accept that the next tick of the market is completely 100% uncertain. Number 4, sit on your hands and trade fewer but much higher quality setups. And number 5, commit to mastering your internal psychology before you spend another minute tweaking your chart indicators. The market doesn't beat traders. Traders beat themselves. Look, the market is just a neutral stream of price ticks moving up and down on a screen. That's it. It is your own lack of discipline, your own gripping fear, and your own fragile ego that causes you to hit the wrong buttons. I want to leave you with this final provocative thought to really reflect on before you sit down for your next trading session. Are you actually trading the market right now, or are you just trading your own unchecked emotions? Take a hard look at your journal and find out. Thanks for joining me on this explainer, and I'll catch you next time.